what is your personality? Are you happy being wrong 7, 8 times out of 10? Or do you prefer to be right quite a lot, but have only a 1-to-1? Self-accountability is the hardest because you don't have to do anything. It does help to get around people that are going to go, stick with a plan.
Hello everybody, welcome to Trader's Mind Chat. Today I will be speaking with Jason Graystone from Tier 1 Trading. Super pumped to have Jason on the show today. He has been trading for a real long time.
Question was, how would you design a trading process for yourself? How would you advise someone to go about creating a trading plan around their own personal trading style?
Yeah, absolutely. So if I went back now and I was to design a trading system and I knew what I know now, I would first dedicate a time of day that I could consistently dedicate to trading. So I would start by figuring out what time of the day I could consistently dedicate to trading, whether that's at 9 at night, 10 at night, 11 in the morning, 9 in the morning, whatever it might be, because everything in trading is based off of consistency. And if you can build the habit, even of building a plan or even learning, you want to start building in that habit of consistency.
To tack on to what Jason was saying, I think that's great to first start with or to incorporate what you're able to handle, right? Like that's one of the most important things that I think that you could do is figure out what you can handle. Part of it too is you want to figure out what is your intention with your trading, right? Often that's something that you figure out later on after the fact. And if you start with, okay, I intend for this trading account to be play money, or I intend for this account to be retirement, or I intend for this to be some kind of a supplemental income stream, it's going to dramatically affect how you trade that particular account. So start with the intent, right? And then from there, I like to figure out, okay, now I'm going to go and model success for, now that I've got my intention, let me try to model success. And I'll look for a lot of different things that are going to help me generate that or point me towards that goal. Once I understand how to reach that goal from all these other mentors and people that have made it, then I want to start making it my own and trying to fit it into my lifestyle, like Jason was saying. All right, third time a charm. Man,
we have like radio waves over here in the UK.
Yeah, I know. I think some of those radio waves jumped across the pond earlier too, because, well, when you posted that we were going to go live in 25 minutes, I was posting the exact same thing at almost the exact same time. And, well, we didn't coordinate that at all. That's just like the magic of the universe.
Yeah. So what I was saying basically is design it around your life. Try and make it easy on yourself. So I always say, like, if you was to I think people try to force trading into their life, and by doing so, they make it very difficult on themselves, and there's really no need. And I always give the example of if you was learning to play a guitar, right? So you would play one chord, you'd learn one chord very slowly, and then you would learn another chord slowly and another chord slowly, and then you might play a song very slowly using those 3 chords. And because you've built all the muscle memory and the skill and everything, it's already there. So then you can just play the song nice and easily. But months down the line, if you then decide to play a faster song using those same 3 chords, it's very easy because you just speed up, but you've built the skill. People try to build the skill whilst they're playing a fast song, and it's just a mess. It's just, it's very, very difficult. So one of the questions you should ask yourself is, how often can you even look at the charts? Is it once a day, twice a day, 3 times, 4 times a day, realistically, without being on the phone to a client or trying to drop the kids off at school or taking the bins out or whatever? If it's twice a day maximum, you really want to consider just trading off of the daily time frames. If it's 3 to 4 times a day, maybe the 4 hour, but and if you can't check the charts any less than that, don't build a system that's traded on any time frames lower than that, because you might as well just build the system on the higher time frames, and then you can go down later when you start bringing in an income, freeing up some time, and so on. So
yeah, I love that answer. I love that answer. It's figuring out like how to make trading into your life instead of letting it take over your life. Because and I fell into this trap too early on, right? Like, so my trading journey started about so I started reading about guys like William O'Neill, and I was like, wow, like I want to go and be just like him. And so, and then I read about other full-time traders. I read Minervini's books and other people within that genre. And I'm like, all right, let me go and try to start applying this without realizing it in the moment that I'm looking at them at the end of their journey while they're doing this full time, all in, doing this kind of analysis, and then it wasn't working for a while, and then it finally dawned on me that I need to figure out a way to make this into something that'll work for me as a part timer. And then once I was finally able to distill it and filter it down into, like rather than trying to hit the home run every time like they were, to just like set up the T-ball, start hitting that first, then eventually working my way up.
Absolutely. So there's one thing is to make it easy on yourself, and the second thing is to figure out your personality, because there's two ways to make profit. You either have a high strike rate or a large reward to risk ratio. What is your personality? Are you happy being wrong 7, 8 times out of 10? Or do you prefer to be right quite a lot, but have only a 1-to-1? So you have to find that balance as well, and that all comes through back testing.
Interesting. So I was talking with a client yesterday, and because of what you just said, it triggered something. So let me ask you this question and see how you would think through it. So this person was somebody that was able to find and ride ridiculous trends, right? Like this guy bought Bitcoin early, rode it all the way up, and came back for the roller coaster ride back down to his starting capital. Did this on a number of trades. So he's great at finding them, but he wasn't great at exiting them. And so something that resonated with me that would be able to work for him, I thought, was something that David Goggins was talking about. Do you know who he is? David Goggins?
Yep, the colored dude.
Yes.
He's an athlete, right?
Yeah, this guy.
Yep.
Former Navy SEAL, did it all, ultramarathoner. One of the things that he was talking about in his book was that he was attempting to be in Delta Force, which is an elite group within the Army Rangers. And well, when he was trying out for it, he was way ahead of his class. He thought that he was going to pass this particular revolution. And so he just started daydreaming about the finish line and started relaxing on the planning and setting backstops to keep himself on course. And then when he finally got out of the daydreaming, he looked and he's like, oh shit, I'm miles away. And then he had to try to backtrack, get back on the path, and he ended up getting sent home. So my advice to this guy was to, because he was kind of like what David was doing. Like he saw the finish line and was daydreaming about it, but then he started to relax on the planning and setting the backstops. So setting the backstops, even if they're progressive, would help. Well, what do you think?
I think greed plays a little part of that kind of mistake, because I know a trader as well that took a 25 grand account to 1.1 million on the Bitcoin ride, and he thought it was a correction, and he ended up coming out with about $700,000. So he went up to 1.1 and then came out at $700,000, and he wasn't really going to come out either. It was actually it was actually his wife that was saying you need to take the trade out, and he came out. But he said to me, he said I was becoming a bit greedy because he'd never had a trade like that before. So yeah, I think the Bitcoin's a bit of an anomaly. But you're absolutely right. You do have to plan for planning for targets is just as important as planning for entries, because it's there's no point taking the trade and being right if you can't capitalize and squeeze as much profit out of the market as you possibly can.
Absolutely. So well, what are some ways that you've experienced greed in your own trading, or maybe ways that you've seen your own students experience greed? And then, well, what is some recommendations to deal with it?
Greed. One way that I've experienced greed is when I got into a trade late once. So I sort of chased the trade, and I suppose that was sort of fear of missing out of the trade as well. But I got in late, and because I felt angry with myself because I'd sort of broken my rules, the market started going against me. I'd already got in late. It started going against me, and I moved my stop loss. So I was being a bit. It was fear and greed, really. I was, I was being greedy in the fact that I thought, I'm going to get some profit. I moved my stop loss down and things like that. The way I dealt with it is just by I ended up exiting the trade and really just going over the post-market analysis, reviewing what I'd done that day and comparing it to my previous trades and my back testing, and it just you sort of give yourself a bit of a kick. But it was also, I think what's important is being around the right people. So if you've got decent people around you that go, come on, give you a bit of a slap, I think that helps, because as you know, it's a bit of a lonely game, and your only accountability is yourself, which is the hardest accountability. Self accountability is the hardest because you don't have to do anything. No one's, you don't have to do anything if you don't want to. So it does help to get around people that are going to go stick with a plan. One other story is when I first went live. So I first went live for the first time after I treated it seriously. So I spent about 18 months blowing a lot of money, and then I spent about 18 months applying myself correctly to the markets. And when I finally went live as a pro, without, when I said to myself, I'm not going to lose any more money, 4 weeks later, I had less money in my account than I started with because I'd gone straight into a drawdown. So it was bad luck how I entered the markets. But again, it was only because I had people around me to say, no, come on, stick with it, that on that 5th week, that's when I went into profit. And that it was only that one point where I 100% trusted my plan. Up until that, I still had a little niggling doubt, So being around people, it helps you with stops you being greedy, I would say. As I say, my friend whose wife cut him out the trade is being around someone.
So do you always trust the plan, or rather the process of the plan at this point?
Oh, absolutely, yeah. I mean, one thing we never know is what's going to happen next. So every single drawdown that I hit, yes, of course, it's like, if it's a 2-week drawdown, 3-week drawdown, there's always a little bit of your mind that's like, is this it? Is it just going to stop working, all this? But that's why it's important to journal your trades, review regularly, so that you can tweak and adjust, just like in any other business. If you find out there's profits missing, you go in and you dig around to see where they're going.
So how do you view these losses or these losing streaks?
How do I view them?
Do you view them positively, negatively? Do you view them as like, oh man, like I got to get in there and adjust something, or do you see it as learning experience to where, like, how am I going to take things from I presented this strategy to the market, it's giving me feedback, how am I going to tweak, if anything?
First of all, you know, you have to think very long term. So I don't tweak anything too soon. I usually give it 6 months to a year before I even consider tweaking anything. Second of all, there's just the cost of doing business in any business. So with trading, instead of, you know, selling a cake at a cost and paying the overheads and getting the profit, with trading, it's sporadic. So you're getting like a week of profits and then maybe a couple of days of losses. And really, it's the profit over time is really all I'm concerned about. So as long as there's nothing, as long as I can refer to my back testing and my journal trades, and I can say, well, I'm nowhere near my maximum drawdown. You know, I haven't had a loss that's exceeded my maximum loss in pips or money. This is perfectly normal. I haven't exceeded the amount of losing trades consistently in a row. This is perfectly normal. And as soon as I do exceed any of those things, then I can start to look at, well, do I need to move my stop slightly? Do I need to take profits slightly early? Do I need to be a bit more aggressive? Do I need to be a bit more conservative? But you wouldn't be able to do that and make those tweaks if you weren't journaling your trades, if you wasn't keeping an eye on it.
So 6 months to a year, you're looking to make tweaks. So now, how long have you been trading?
I've been trading since 2011, but I've been really profitably trading since 2013.
All right, so 8 years, 6 years being very profitable. So is your tweaking every 6 to 12 months a result of you riding up that learning curve where like most of it's set, or is it, you know, like would you be tweaking things like if you were back in the earlier stages, would you be making adjustments more because like you're in that earlier learning spot where you're
Sure. Yeah, no, I the way I started off trading was ultra conservative. So really my tweaks, the only tweaks that I make are really to become more aggressive. So for instance, like if there was one market that I would need the RSI to be overbought before I get a signal, whereas I've removed that now on some of the pairs because I realized I was leaving money on the table. I could be more aggressive and not use that filter and get in the trade and still get the money. So I haven't had to significantly change any of my systems. It's really just a case of me being conservative to protect capital and then stripping out those filters to become more aggressive. And that's really all it is.
Interesting. Yeah, I kind of feel that it's there's a bit of uniqueness to it. Like I like to review my process at least like the whole process once a month, and like if something brand new like pops up, then like I'll see to like how can I incorporate this right away. But most of the time, like major changes are similar to yourself, where a major change might happen in 6 months, and it could be something that's not related to trading. It could be something like when my daughter was born, my trading needed to change dramatically, and at the time she's turning 4 this May. I didn't realize it at the time when she was born 4 years ago that my trading needed to change in a major way, and I learned that the hard way. So lifestyle changes definitely need to be incorporated, kind of like how you mentioned at the top of this interview.
Yeah.
So
did you interviewed Akil already? Did you?
Yeah. Yes, I did. He was actually the first interview. Love Akil. Akil and I have been following each other for years, going back to Twitter and before his Tier 1 was established. That actually, I'd like to hear a little bit about your own story. How, like, why you do what you do, how you came to know Akil and to develop Tier 1 with him, what you're trying to do with Tier 1. Let's hear it.
Okay, so I built a business from 22 years old, and I became very, very frustrated in the industry that I was in. From about 24, 25, I was into investments, and I thought I don't want to do this forever, so I need to figure out a plan to at least replace my income somehow, so I can get out of this, or at least just do the little bits that I enjoy and get rid of the rest. So I was studying the likes of, Dalio, Warren Buffett, Kiyosaki, and all the greats, and I really put together a solid income replacement strategy through very passive investments, some strategies to do with my income, where I was going to increase my income and pump as much as I could into investments. But it wasn't quite getting there. It was going to be about 10 years, 15 years before I could replace my income. So I started looking at speculative endeavors, such as poker, options, Forex trading. And I thought, this seminar came up, and I thought, oh, I'll go along to this seminar and see what that's all about. So I went along. I thought this will be easy. And then 18 months later, I'd blown about £40,000 in the markets on courses and, signals, and just throwing money into the market. And what I did learn is a lot in that 18 months about what doesn't work. So I was a bit pissed off at that point, to be fair. And then I sort of went all the way back to something that I learned first of all. It's funny because a lot of traders that I talk to, they learn something and then they go off on this wild chase for the shiny objects, and then they end up trading something profitably, what they learned really early on, but they just realize that they can build the system into their, around their personality and their life. So I ended up doing that, and there was a couple of strategies that I was doing well at, and it was one of the strategies was keeping me at break even, and then I started trading another system that was putting me into profit. And then I just got around some decent mentors. So Jason Stapleton was one of them. I was part of the Trade Empowered gang, and I met Akil through Trade Empowered. So we was at Trade Empowered. I then ended up, saying, hey, you haven't got a live room over here. If you're ever up for a live room in London, give us a shout. I ended up doing that. It was a massive success. And then the rest is history, really. We just sort of said, let's create something brilliant, something that has never been done before. And we really went back to the drawing board, because we figured out that a lot of traders were still failing. And we sort of went from how can we, instead of saying, how can we sell a course or sell an indicator or so, we just said, how can we create successful, profitable traders? Like, how can we create something where they can literally not fail unless they give up? So we took all the data and analyzed the data of how the traders had behaved previously. And we said, well, there's a few weak points here. Let's just sort of support them in all those areas and create this platform. And that's what we did. And it's just been absolutely phenomenal. We've got nothing but results from the traders inside that platform.
So what were some of the areas that you found that people were failing at?
Zero accountability. So the thing
Okay.
with courses is, there's no accountability. You don't even have to open it. No one's tracking how fast you're going through it. There's something called deletion, distortion, and generalization in your brain, where you're making up information based on past experiences, and you're skipping information, and you think you've taken the information in when you actually haven't. There's, apart from the no accountability, there's just no, you don't get the nuances. You can't really see what real life is like. So you're taking the course and it's all theory. So you can't really watch over the shoulder of a professional. So one of the things we built in was an accountability session. Every Friday we host an accountability session. We bring a trader on. They talk to the whole room, the whole network, about what they're struggling with, what their plans are. And then once they've set their goals of where they're at and what they're going to do, we tell them to then book the next session so that they've got that accountability ladder to work to. We obviously have the live rooms, but basically we provide them everything they need, including the courses, the tools, and the accountability, the dedicated Q&A sessions, and the network, which is, community, I'm finding out, is probably the most important thing. I was speaking at the Forex show in London the other day, and lots of the educators there were like, we need to start focusing on community because it really gives you that accountability. So we just provided everything, all of those little weak points, nowhere to fail, nowhere to slip out, unless you want to give up. So yeah, that was it.
So the person that's coming on and doing the presenting, now that's one of the members that is getting up and sharing. Am I understanding that right?
So I host the accountability session every Friday. One of the members will book a slot in to speak, and we'll just bring them into the live room, and we'll share their microphone. They can share their screen and talk through trades if they like. And we just it's a safe house, if you like. It all stays in there, and they just openly share what their problems are, what their goals are, what situation they're in, what they're working on, what they're struggling with, and we just all pitch in. It's really great.
That's freaking brilliant. I love that.
We've had fund managers that have got their own fund managing business that have, they're doing phenomenally well. They've come into the platform and just to take part in those sessions. So it's really, really great.
Yeah, that sounds like what similar to what we do at the New York City Investors Business Daily Meetup. So I'm actually presenting at this thing tomorrow, right? But it's a live thing, and we have a group of organizers, and every so often somebody from the audience will want to present, and we ask people to present, and they'll come up and they'll share. And it's in them teaching that, like, everybody ends up getting so much more value out of it. And that's how I started. I was one of the people in the audience. I volunteered to come up and start teaching. And when I volunteered to start teaching, that's when things really started to click very well for me too. And so the fact that you're bringing people from around the world to do this and do it virtually from the comfort of their own home, and like it just grows and grows. That's such huge value, man. Congrats.
One of the things that I don't do is share gimmicks and fluff. The only ideas that I share is stuff that I've successfully implemented and that has been useful to me. So I only preach what I practice myself. And accountability sessions and accountability partners is something that I've been part of since I was in my early 20s. So, even to this day, I've got a couple of accountability groups, and I've got an accountability partner that I submit a spreadsheet to every single Friday. And I know the power of it. So, I know by sharing it to our community that it's going to be of value.
I love that. Do you have time to take some questions from the audience?
I've got all the time in the world, mate.
Fantastic. First question that I found. Let's see. Michael, can you please elaborate on your daughter being born and how you adjusted your trading? Jay Rise was saying agreed. How did Lily affect the trading? So, what happened to me was I was trading, I was swing trading for a while, and I was doing my own research, and I was producing my own analysis. At the time, I had this business where I was doing research analysis, publishing it, had a lot of clients, and I was doing my own swing trading and working a full-time job. And I was able to manage all that before we threw a baby into the mix. And so my equity curve was going like this, and then after she was born, it started to bounce around like this. And I'm like, well, why? And it didn't dawn on me that my beliefs had shifted. My beliefs were I want to be a great father. To me, I define great father as being there for her, seeing all those little moments, like where she starts to crawl and starts to stand up and says a first word, like all those kinds of beautiful things. And because I had this business where I needed to produce for clients, I was dialed into that. So what would normally take me 5 hours or 10 hours ballooned into 20 hours on a weekend. And I was getting stressed out. I started putting on weight. I started developing this weird skin disorder. It was my marriage was on the ropes too. No, with all that added stress, and it hadn't dawned on me until like it finally got to this breaking point where it was just after Thanksgiving 3 years ago, and my wife was getting ready to take our daughter Lily to see Santa Claus for the first time, and she's like getting her up, and she's like, "Hey, we're gonna go see Santa." Oh, but you're busy working on your business, so you won't be able to go. And then at that point, I just threw my hands up in the air, like, "Fuck this! That I did not get into this business or trading or any of this to miss my daughter's life, and I was just going to throw it all away." And then thankfully, I had some very good people come in and start helping me out to offload some of that stress, help get my life back in order, start exercising again, and get my health back in shape. And within about 3 months, I was back down to a reasonable weight. I developed a trading plan that was able to now work for me, where I was trading, where I did less of the research myself, but I was still able to see the setups and just focus on execution. And that worked for me for several years. And then my trading plan changed again last year. Last year, I finally quit the day job to come do this and be a full-time trading coach and to trade. That allowed me to do quite a bit more. So my trading plans adjusted again because now I'm able to see things that are happening in the middle of the day. So I think, and this goes back to the very top of the interview where Jason was speaking about a trading plan and a trading process that fits your lifestyle. And that's why I think that it's freaking brilliant. And if you're watching this and you don't follow Jason yet, please do. It's how trading fits into your life, and are you going to be able to manage it because you are the executioner. I can't pull the trigger for you. Jason can't pull the trigger for you. You've got to pull it for yourself, and you need a system that is something that you're going to be able to work.
100%. You can buy any off-the-shelf strategy, and you won't be able to trade it. You have to pick one that suits your personality and your lifestyle, or make it to suit.
Let's see. What style of trading are you guys into? Jason, I'll let you take this one first. What style are you into?
I'm purely a technical-based trader, so I trade I trade chart patterns, flag, breakouts, trend continuation, support and resistance. I'm very much a chart pattern trader, technical trader. There's a couple of advanced patterns that I trade. And that's really it. So I don't trade off of the news. I do pay attention to a couple of high impact news releases. I won't be trading around Brexit. I won't be trading. I try and stay out of NFP, FOMC, ECB press conferences, things like that. But I don't really. I would say fundamentals is my weakest spot in trading. So so that's how I trade. I trade on I've got a swing trading account, which is based off of the daily, and I've got a intraday account, which is 4 hours, 60 minute. And that's it. What about you?
Yeah, all right. Before I get into what I do, I want to piggyback on that question for you. So you mentioned that you split up your accounts, right? Like, yep. You have one account for, you said swing trading, and another account for, what was it? Was it day trading?
Yeah, it's more of a intraday trading account because it's one that I use in the live room. So it's a bit more action.
So one of the things that I found a game changer to be for me was when I finally split up each of my trading accounts. At first I was trying to do everything in one. I was trying to do longer term trades, shorter term swing trades in this one account. And I was afraid to break up the account because, I won't have enough money to do this. But you know, I would be looking at one thing, and then like different rules and signals would start to bleed into another trade, and it was just a mess. So that it sounds like you've had a similar experience of like when you break up the accounts, it's a lot easier to follow a set of rules and guidelines and principles and just let it run its own thing. Is that right?
Yeah, that's it. I mean, my swing trading account is purely sort of generational wealth creation, not far from my passive, my passive investments. And it was just for that reason. I wanted to trade. I trade 27 markets on that swing trading account, which takes me about 5 minutes a day to check. And that'd be pretty boring to bring that into the live room and show people because it's just there's not a lot going on. And then the other account is a bit more action. That's where I sort of get my pocket money.
So I have a few different accounts that I run as well. It all stems from this methodology called CanSlim that William O'Neill came up with. He's the guy that was founded Investors Business Daily. So I studied him, and I studied numerous others that Jack Schwager speaks about in his book series, Market Wizards. Guys that fit into that category, like Mark Minervini, Dan Zanger, David Ryan, and then others that talk about trading psychology, like Mark Douglas and Dan Tharp, and people like that all sort of resonate with each other. And after following those masters, I started to come up with my own recipes of how am I going to follow this stuff. And so I have a separate shorter term swing trading account that's meant to generate income. So I trade credit spreads on those, weekly or biweekly credit spreads. I have another account that's a little bit more intermediate term, still swing trading, but intermediate term swing trades where it's being held for weeks or months. Then I have two longer term accounts, one for my daughter and a retirement account. And for my daughter, it's more longer term holds that are found on weekly charts, and I'm analyzing monthly charts. And for the retirement accounts, I have a similar strategy, but I'm also selling covered calls on that account.
Yeah. So my investments are very, very passive. You know, I frequently buy the S&P 500, for instance. There's a few real estate investment trusts, things like that. So that's my passive investments, and then my sort of day my swing trading account that I'm in trades for 3 weeks to a month at a time. That's my longer term trading, and then obviously my lower time frames, which is a 4 hour 60. So yeah, it definitely helps to split it up.
Yes, indeed, and it also helps to when I come up with a trade and a trading plan, like I fill out. Here's one that I started filling out. Trade manager. So this is a trade that I'm in now, service now, and I fill out this thing on every trade. And as the trade goes on, I'm filling out one of these sheets. And at the top, this is for my intermediate term account. I think it's written backwards on the screen, but it says intermediate term account, and it says the account name there. So this is on my Interactive Brokers account. And in just having that and having the separate trading plan physically written out, now it's in its own space to be managed in its own way. And it's not just, something that's in my mind or all just written in one journal. Like it's its own space, So having that kind of segregation among your accounts is very useful.
Makes a big difference.
Do you guys see trades as complex or simple, or are all trades the same overall? Well, what do you think? Do you see trades as complicated, simple, or the same?
Well, there is definitely more complex trading systems than simple systems. So yeah, my answer would there are definitely more complex systems than others. Like Ichimoku Cloud, for instance. You know, there's so many Elliott waves. If you had 100 Elliott waves traders in the room and asked them the rules for Elliott waves, they'd all have a different opinion on what Elliott waves is, right? You
Indeed.
know, there are definitely more complex systems than others. So my answer would be but I would always go with mentality over the difficulty of the system. So I would rather, I think Mark Douglas said this in his book, I would rather pick a technical trader who's trading a very, very boring and easy system, but has the discipline to stick with that system and, you know, not get distorted or jump the gun or come out early. I would rather put my money with that guy than I would with a fundamental analyst, like a phenomenal analyst that's got all these wild technical indicators and but is still struggling with psychology when placing a trade because there's too much to think about. And a system definitely doesn't have to be complex. Absolutely not. It's all about mentality and being able to trade something that's consistently.
Yes, I completely agree. And you reminded me of something that Adam Robinson said. Are you familiar with Adam Robinson?
Yeah.
So for everybody that isn't familiar with Adam Robinson, go check him out too. He's just started doing a little bit of stuff on Instagram. He's more active on Twitter. His handle is @IamAdamRobinson. And he's one of the original founders of the Princeton Review, you know, that SAT prep course. He's also a chess grandmaster, and he studied with Josh Whiteskin and I think Bobby Fischer. And now he's a global macroeconomic advisor to some of the biggest hedge funds. And one of the thing that he spoke about that you just reminded me of, Jason, is this study that was done back in the 70s with horse racing. And they took these professional gamblers and they said that, okay, first they gave them a complete blind test and said, go pick horses and, you know, good luck. And they were right 10% of the time. Then they said, okay, we'll give you 5 pieces of information. Any 5 pieces of information that you want, we'll give them to you. And so everybody got to pick their own. Somebody might say that they wanted to know the height and weight of the jockey. Somebody else might be like, I don't care about that. Give me the last couple of races that this horse won and tell me the times and the speed. And with the 5 pieces of information, they were able to improve to 17% accurate. So a 70% bump up. And then they asked them, well, how right do you think that you're going to be? And they said that, oh, well, we think that we'll be right 19% of the time. So they were 17% accurate, and they thought that they would be right 19%. So pretty close. Then they gave them any 10 pieces of information they want, any 20, any 40 piece of information. And as they got more and more information, their confidence went up and up and up and up. And then they looked at their results, and the results had flatlined at 17%. So the only thing all that information did was increase their confirmation bias, and it caused them to start losing because they were betting heavier because they were more and more overconfident. So you're far better off with less indicators, keeping it more simple, and becoming comfortable with the uncertainty.
Yeah. I think someone just said, can you just trade off of resistance, support, and RSI? You can earn money thousands of ways in the market, but you have to test it. So I remember when we did the launch, I came up with I did a section on strategy development, and just to sort of give you an example of how a system is made, I sort of came up with this trading system on the spot. In fact, the guys in the room designed this system. We just made the rules up. for an example, and it was literally just bouncing off resistance. As soon as RSI went over sold, we waited for a higher closed candle, and we bought, and it was like a 1-to-1 or whatever. Is it profitable? Actually, in that, I think we hit like luck, because it was like 400, 500 pips in the 4 or 5 examples we gave. But that's an example of something that you could go and test. I personally think that you need a few more filters than that. But yeah, go and test it. You'll never know unless you test it.
Yes, and I think that position sizing plays a heavy role into will a system be profitable or not.
Yeah.
So if to take the extreme examples, if you're somebody that goes all in, bets your house on every trade, maybe you win the first time. Fantastic, you've quadrupled your account. Then you do that again, and you go up that much higher. But if you keep on betting everything on every single trade, eventually you're going to blow up just once, and then that's it, you're done.
Yeah.
To go in the extreme other direction, let's say you're the guy that got in on Bitcoin when it was trading at, well, what was the lowest that Bitcoin was ever trading? Do you know?
Lowest it was ever trading when it
when it was first issued. Like, well, was it like
20, yeah, it's like 20
single
cents
digits? Yeah, right, like less than $1. So let's say that you're the guy that got in at $1, and you wrote it up 17,000%, or well, whatever the highest percentage was, and you sold. That's amazing, but you only had one coin. Is that life-changing? Probably not for most people. So your position size matters. Yeah. And there's a lot of different ways that you could do it too.
Other than journals and trading plan, what other tools to improve on psychology? One thing that I would say improves psychology is just not necessarily a tool, but just get others on board with what you're doing. Because there's so many traders that I meet that are sort of a bit sheepish about what they're doing. And people say, oh, what do you do? And you say, you know, I'm a trader. And they sort of belittle you a bit. They're like, oh, that's risky, isn't it? You know, that's sort of gambling. And then you sort of brush it off and you go, oh, yeah, it's kind of like, you know, kind of like stock market. And you don't really go all in and explain. I would say tell them, go all in, get them on board with what you're doing. Also, what Michael said is when you teach someone something, you release this information that's only in your head, because you've probably never even spoken to anyone about trading. It's all in here. And as soon as you start explaining it to someone, you get a new confidence. It's like, wow, I didn't even know that information. I didn't even know I knew that. And it becomes real. As soon as you speak to someone, then they get interested and then they're on board. So you know the pressure's off. Like they know what you do. You feel a bit more professional about it. The pressure comes off a little bit, eases your psychology. Does that make sense? I mean, I find that's definitely a winner to go and explain to people and teach people. If you've got kids, that's a great thing to do. Go and talk to your kids about it, because they'll ask questions that are so innocent and naive. It will literally iron out any grey areas that you've got in your head. Yeah,
absolutely. Well, what I would suggest, I have 2 suggestions. The first one is setting up your environment, so your physical space to have triggers, right? So over here, I have a whiteboard, and I'll write messages to myself on this thing every day, different quotes, things to like remind me of what I need to do and how I need to do it, get myself into that kind of a headspace, right? Yeah. Like, so what I'm looking at around my physical space, well, what I'm listening to, what I'm reading, what I'm watching, right? Like all those things are planting seeds in our brains that over time will develop plants, or they'll develop weeds if we're not careful. So who's in our space, our environment? Yeah. The second thing is, I think that discipline in one area will influence discipline in another area, and expanding comfort zones in one area will expand comfort zones in other areas. That's one of the reasons why I like sticking to a morning routine where I'm getting up early, doing a meditation. I'm doing this Tony Robbins priming exercise. You familiar with that?
Yeah, I know what you're talking about. Yeah, I do walk with the greats or something.
What was it? Walk with the. I haven't heard of this one.
It's called Walk with the Greats. I'm sure it is. I'm not sure on the name of the actual program. I'll dig it out and send it to you. But I do it about once a month.
Interesting. Yeah. So the morning routine and this morning I went out for my run. I didn't want to go out for the run. It was windy and cold. Like it was the temperature was like 24 Fahrenheit and it was windy. And I'm like, oh, like I'm not really feeling it. But I went out and I did it anyway. I feel like doing things like that you don't necessarily want to go out and do, but you do it anyway. Like it reinforces the discipline and it builds into not just your head that you understand conceptually, but like in your nervous system, you know that you are somebody that when you set a goal, you're going to stick to it, right? So when you write up these trading plans, rather than throwing them out the window, no, I'm somebody that sticks to the plan no matter what. I'm somebody that's going to go and run outside when it's cold and below freezing. So like things like that like tend to bleed in and help. So
Tony Robbins talks about jumping in the plunge pool, right?
Yes, he does.
Yeah, so that's one of the things I did when I moved. I'm very similar to you. I do stuff that I don't want to do. I'll go for a run, and I'm 100 meters down the road. I'm trying to talk myself out of the bloody run because I don't want to do the run, but I have to beat my mind. I'm like, no, you do the run. And, I don't want to run. I really don't want to run. When we moved into this house, I spent about 25 days just jumping in the pool every morning. It's freezing cold and getting back out because of Tony Robbins. But yeah, things like that. Like I do cold showers and things like that. Yeah, it's just beat your mind. It does. In fact, I did a video on that, and that is one of the things I recommended. Just constantly do exercises to overcome your brain's challenge to you. Beat your mind.
Beat your mind. I love it. I think that beat your mind is a great spot to close off because Instagram just gave me the 2-minute warning. So. So everybody beat your mind, push yourself, expand beyond the comfort zones. And I think that everything that Jason is doing with Tier 1 trading is helping towards that mission. So definitely go check out Tier 1 trading, check out Jason, check out Akil, follow them on Instagram, everywhere that they are. Well, where else are you? You're on Instagram, obviously. Where else are you? You're on Twitter?
Instagram, YouTube, Twitter, Facebook, the whole lot, really.
Awesome. And the best way to find you is just type in Jason Graystone or Tier 1 Trading, and you'll pop right up.
Type in Jason Graystone. There's quite a few fake accounts popping up on Instagram, but my handle is J_Graystone, and all the others are fake.
Amazing. Well, thanks so much, brother. It was a pleasure chatting with you.
Same. Likewise. Thanks for having me on.
100%. Take care. Have a great rest of the day.